Good afternoon, everyone. Rob Lukey with Shop Prop Realty. I wanted to go over real quickly the market, looking at the market for 2020, 2021. It's currently March 12th. Market gap down, stock market in particular, gap down about 1,300 points, 1,700 points today. Hit about 22,000. So we're at about a 30% sell off in the stock market. My personal opinion, right around 22,000 on the Dow I'm using as a barometer. Obviously, there's lots of indexes, S&P, so forth, that you can use as a barometer. But Dow at 22,000, I think a 30% sell-off looks good. I'm buying in here. Could go a little bit lower. You don't need to go full position, but certainly get a little bit invested, if not half. I'm at about 50%. Probably buy a little bit more before the end of the day. Get to about 60 to 65% invested. As far as the viruses, I did want to talk about this in relationship to the overall market. So how did it impact? Obviously, when we talk about viruses, this is housing starts. So how did viruses impact the overall market as far as housing starts, which is a good barometer for how the economy is doing versus the stock market that is actually a leading indicator, and then how it impacted real estate prices would be up here. Okay, this is the real estate. So first of all, let's talk about the virus and compared to other viruses. I'm not an expert, obviously. All I do is I look at numbers. And what we'll see here is that when we look at overall I look at the fatality rate and then the overall cases, the worldwide cases. Obviously, this is meager, nothing that anybody's too worried about. This gets a little bit with 40%. You start at 33,000 cases. This happened in 1976. You'll see that these viruses and the short-term impact on the stock market was about a 10%, 15% sell-off. These big areas that are highlighted are actually related to mainly any type of major recession that we had happen prior to 2000 really had to do with energy, right? It had to do with oil. If you go back and you look at this, and you had oil, and then you had this massive move in inflation, and then we had this increase in monetary policy, which created obviously the market in different types of recessions. This particular recession, the Great Recession, we know was specific at least to the housing market, even though obviously we know the derivative markets from a standpoint of CDOs and so forth, that actually is what happened as those bonds and CDOs started to fail. You had the market and the real estate market crash. So why this to me is a little bit different and something to at least take a look at, and why it's probably having a bigger impact than all these other viruses that came out, is because this was as of January 31st, right? This was the data that we had, which we had 11,871 cases, 259 deaths. We now have 127,000 cases, 4,700 deaths worldwide, so about a 3.5% fatality rate. So it looks pretty ugly. Even in the U.S., we're at about a 0.03%. Obviously very low fatality rate to the worldwide averages. A lot of this was impacted obviously in mainland China, where you had the virus occur. No one knew how to handle it, and so obviously more death rate goes up and so forth. But that, when you look at it, it's March 12th. So this was January 31st. So we're talking about 45 days, and look at if you go ahead and extrapolate those numbers, if something doesn't stop, obviously this will be a bigger issue. If you just extrapolate those numbers, you're talking in the next 3 or 4 months, you could see it get up to certainly 600, 700,000 cases, more deaths and so forth. I think so from a standpoint of what the overall market is doing, I think it's good. And that is trying to protect and slow down and then come up with different types of ways to fight the virus. So how's that going to impact the real estate market is the question. And that is that we saw obviously in 2018, we saw that drop in real estate prices in June. And we saw that start 10% move, this move here, 10% drop happened from about June into about November of 2018. Market still had a lot of inventory in it. It ate up that in 2019, and I really thought the market was going to be coming up and start to actually break the highs. I think it would have had this coronavirus hadn't occurred. So the bigger question obviously is how this is going to impact the overall market if we don't get it under control. And then the reality is that if we go and we look back at other viruses that have occurred, the thing about it that is hard to analyze is we haven't had anything obviously in recent history, 1967. Obviously, you can go back to the Spanish flu and so forth, but we've never had anything that has recently happened that would be this many cases worldwide with the death rate that it currently has. Like I said, we had H1N1, which had 284,000, but you only had up 2%. Now in the US, right now, at least currently with the data that we have, that's about the fatality rate that we're seeing, 3.03% fatality rate in the US right now. Now, it just started to impact us, so we won't know. So I think it's going to impact real estate prices. I do think that we're going to get a slowdown. I think that we'll probably see prices come off a little bit. I don't think it's going to, it's just, again, it certainly could, but my feeling is that the stock market is a buy here around 22,000. I think it'll trade around here a while and have kind of a flat bottom. And then I also think it will impact, obviously, real estate prices as if this continues to grow, which everybody expects it will. So maybe a 5% drop in real estate prices over the course of the next year. And as we come out of this at some point, maybe over the next 6 to 18 months, probably, obviously, market prices move up. We're pumping so much liquidity into the market, not just in the US, but worldwide, that when this gets under control, there's going to be so much liquidity. In my opinion, obviously, housing prices are going to break through the highs, and you're also going to see the real estate market, the stock market break 30,000. Now that's going to, in my opinion, that'll occur with the virus, obviously, getting under control and people feeling more comfortable. So I think that overall, this is probably a buying opportunity, certainly in the stock market. In the real estate market, you can kind of proceed with caution a little bit. But again, this is probably a great opportunity where there's not a lot of other buyers out there, where you might be able to pick up some real estate prices before over the next 6 to 18 months. And you'll be pretty happy, I think, as we get through this whole thing. Anyhow, I hope that helps. Have a great day.